Homebuyer 101, jumbo loans, the most important thing I can share with you as a lender. Okay, guys, this is very important because I see this happen all the time. People will go to one bank and the bank will say you don't qualify. So they suddenly then think, okay, well, this bank wants 24 months of reserves. This bank says I have to have a 760 credit score. This bank says I have to do this, I have to do that. That's just their guidelines. Okay, with jumbo loans, what is required varies by lender. So, what Chase wants is going to be different than Bank of America or Wells Fargo or JP Morgan or Truist or Redwood or. They all have different guidelines of what they will and will not do. So, for instance, I was looking at a loan scenario today where there was one investor where they would do 6 months reserves. Reserves are principal, interest, taxes, and insurance sitting in the bank. So let's say that your payment is $4,000. They want to see that you've got at least $24,000 just sitting there. Okay. Another lender would only look at that loan, another investor I was looking at, with 30 months of reserves. Okay, very different. Now, in fairness, was the rate on the 30 months reserves better? Yeah, totally, because it's a lower risk loan, right? The more money you have sitting in the bank, the more likely you are to make the payment. So the rate was better with that one. But if the client only has 6 months, then that's the investor to go with. Okay, now, where it gets tough with jumbo for you guys is if you're going to a bank, the bank is just going to have their product, right? What they require. So imagine if my client had gone just to the lender with the 30-month reserve requirement. They would have gone, oh my gosh, I can't buy. I need to save so much money, because that's a lot of money, right? When in fact, there is another option with what they have now. So as a lender, the most important thing I can convey to you with a jumbo loan is don't take no from one lender as an answer. Make sure you're talking to another lender. I'm in 48 states, so everywhere but Utah and Rhode Island. Run it by us and we can say, yeah, like we have an investor, or no, like I don't have anyone for that. Maybe check with this person, because that's what it is. We're looking at 10 to 12 investors on a daily basis and going, okay, this person fits here, but they can't do this because of this debt to income overlay, and the differences that we see is reserves. So how much money they want in the bank after closing, credit score. Okay. Now look, there's some that are going to do 680. I don't have any 10% 680. I'm not even going to pretend that I do. But let's say you're doing 20, 30, whatever percent down. There's some that will go to 680, but really, if you want to have the best pick in terms of rates and programs, you definitely want to try to be over 720, especially in the market right now. Okay. So if you're in the sixes, I would definitely be recommending that you work on your credit to try to get a higher credit score if you have time, right? If you don't, you are going to pay quite a premium for that lower credit score. And I don't know of anyone doing under 680 right now. It does not mean it doesn't exist. Okay, so I want to be really clear on that. But you want to make sure that you're talking to multiple lenders to see what you can do. So where it differs is reserves, credit score, debt to income. Okay. So for instance, and this is also where we'll see people get misquoted. Okay. Cause I've had clients where we have them underwritten and we have them with a specific investor because maybe their debt to income's a little high, or maybe they don't have that many reserves. And they'll call me and they'll say, Jen, I was just quoted by XYZ bank and they offered me this rate. It's so much better than yours. And I'm like, yeah, but you have to have all of this stuff that you don't have to qualify for that program. Did you talk to them about that? Well, no, I just asked them what their rates were. That's the thing. And that's the thing to know about jumbo. Look, the more money you put down, the higher credit score you have, the more money you have in the bank, the lower debt to income. Basically, the less you need this loan, the better the rate will be. But if you need the loan, right? You're doing 10, 15, even 20% down, credit, all of that stuff, the rate is higher based on risk. So it's important that you guys know that, and that you just know, don't take one lender as the be all and see all in jumbo. There's lots of investors in the space, and it varies a lot on what they're looking for. My goodness, 30 months versus 6 months of reserve reserves, that is a huge difference. 700 credit score versus 740, that's a big difference. So I hope this video has been helpful. As always, I am licensed in 48 states. I am happy to answer any questions that you guys have, but I just wanted to do a quick video to let you know with jumbo, the guidelines vary by investor. If you go to a bank, you're only going to get one set of guidelines. Do not let one person decline you. Talk to a couple people before you decide that you need to do more saving or credit repair, etc., etc. Thanks for watching, guys.